So you want to have a fresh zone, not being tested multiple times. It's typically the first test is the time that's going to work the best. Because a lot of times you're going to see this over and over again, where we do have a zone. This would be a drop-based rally. Huge candle. Outside of that, we do have a fair value gap, FVG, outside of that zone. So that is even increasing the probability. Now there is a first test of that zone, and we can see price exploded off that level, which made this a nice institutional zone. But if price comes back into that zone, this is no longer fresh because it's now just retesting this area. The logic behind these moves is that this is institutions buying this zone, and the likelihood of them filling all of their orders is not very likely. So they still have orders just sitting and waiting down here for price to return to then rebuy. But if price returns again, they're going to have less orders this time on this time than this time because they already got filled. So now the likelihood of this turning into another huge bounce is becoming decreasingly less because there's less demand in this zone. It was already pushed into this level once, and now there's less orders to buy at this time, which increases the probability it just shreds through that zone and does not actually bounce.